Looking at the previous week and the previous warning we had that we were at a critical junction of the market about whether it's going to turn down for a double dip recession or go up, it still looks like people are pushing the market forward. Now, if we look at this first top line, it's coming down from the peak of 2007. This was the turnover where we really had the market deteriorate. It's coming down to a conjunction point, and this was a trend up from the recovery of March 6th or March 9th. So if we take a look at this as it expands, you see we had a real good chance of taking that recession here. And now we had a very big up day here. So it's a little hard to predict what's going on. I mean, we just gotta have to play it day by day. But it's not too many points to go up and break this previous high, so you want to keep an eye on that. So overall, in the week in review, it's pretty surprising. I've been playing against the tape for a long time. As you know, I'm always hedging against the the upswing here because this volume has been very low. I mean, there's a tremendous amount of capital on the sidelines sitting by, but we've been running up for almost a year, and it just seems impossible for the market not to retrace. So keep your eyes and ears open and your stops tight. And I'm going to take a look at a few other things here, and we will see what else we see for the week. Now, if we take a look at the last 4 or 5 days, we can see a couple interesting things. These very short periods are the overnights because we're using tick charts. It compresses the time. It's actually 16 hours to 8 hours of actual trading here with the main trading. But one thing that was interesting, I think I shared this with you before, that 90% of the movements are occurring overnight. Now, here was a very big up move, and the market just consolidated and sat there for a while, consolidated again, then went up one day and down and ended up just about where it started. Overnight it dropped a tremendous amount and made a big up move. The next day, I think this is Thursday, March 30 or 10/31. Oh, sorry, March 4th. We had a double dip. We ended up at about the same spot. And then look at this huge up move overnight, okay? And it came down, always retraces, and up it went. So, one thing is to keep an eye on what's happening with the overnights using Bloomberg to take a look at the European and the Asian markets, and it's bouncing up. Now, I just have no explanation why it's doing it. Don Ward and a lot of very professionals are really worried about this peaking out. Almost it's going up nearly vertically now, and this is very close to what we might call a blow off top. I just used a 2400 tick chart here to compress everything to give you an idea of how you can look at the week in review and what can you predict from this. Well, a 50% retracement, if I put that on here from this low to the next day, a 38 retracement would bring you down to the open of today, about 11:30, and you can project on up if you want, but I don't like a market that looks like that. It's got to do one of these consolidation days, or it's got to do a reversal and a pretty hefty retracement. So I'd look sharp on Monday morning, and that's about all I have to tell you about this. As we move forward, even a 25% retracement, you can go and put that on there, or a 75% retracement, will give you numbers that are pretty good targets for the next day. So I hope this helps, and I will speak with you later.